Hello everyone, I am Dr. Lakshmi, Assistant Professor, Department of Commerce with Finance in Dr. SNS Rajalakshmi College of Arts and Science, Autonomous, Coimbatore. I am here to explain a concept, fund flow and cash flow analysis in the course Cost and Management Systems. First, we should know what is meant by fund flow and cash flow analysis. Fund flow and cash flow are both tools used in financial analysis to understand the movement of funds and cash within a business over a period. While they sound similar, they focus on different aspects of financial health. So, this fund flow and cash flow analysis is used as a tool by the management in order to make the financial analysis. In what aspect means to understand the movement of funds and cash within a business over a period of time, say 1 year or say 6 months. In general, we think fund flow and cash flow are same, but it is different. We can see the difference in later. First, definition of fund flow analysis. Fund flow analysis shows the movement of funds, that is working capital, between two balance sheet dates. It explains where the funds came from, that is sources of funds, and how they were used, that is application of funds. So, fund flow analysis means movement of funds. Movement of funds, that is, it is not as one transaction like that. So, it implies, they have given an example that we are speaking about working capital. Working capital is a capital needed for day-to-day activities of the business. So, two balance sheet dates means last year and current year. Previous year and current year, we will make the analysis, that is fund movement. It explains the funds, where it is coming from and where it is applied. The key focus is changing in working capital. Key focus is changing in working capital, that is current assets minus current liabilities. So, working capital, the formula for calculating the working capital is also current assets minus current liabilities. The components. Statement of changes in working capital. Comparing current assets and liabilities between two dates. What is the stock of previous year, current year? What is the value of the bills receivable in the previous year, current year? Debtors, previous year, current year. Likewise, current liabilities, creditors, previous year, current year. So, here the comparison of current assets and current liabilities between two dates is the first component, that is we will be calculating using the statement of changes in working capital. Next is fund flow statement. Fund flow statement, it is the statement prepared to show the sources and uses of funds. In what sources we got the fund and in what sources we utilize that fund. So, for that we prepare the fund flow and fund flow statement. Now, we are going to see the sources of funds. Some examples of sources of funds. Issue of share capital or debentures. Issue of share capital or debentures. So, fund, it is not a small cash, it's a long term. So, if we want a lump sum amount for the expansion of the business or to introduce a new product, so we need a big corpus that will be sourced by the issue of share capital or through the issue of debentures. Likewise, long-term loans, availing long-term loans, selling some fixed assets, then non-operating income. These are the sources of funds. These are some examples of sources of funds. Likewise, uses of funds. So the amount, that is the fund sourced, will be utilized for some purpose. What are those purpose? Purchase of fixed assets, repayment of loan, payment of dividends, increase in working capital. So these are the uses of funds. So what is the purpose to prepare fund flow analysis? To analyze long-term financial strategy and investment decisions. With the help of this fund flow analysis, the management will analyze the long-term financial strategy, and they will come to an investment decision. Now we are going to the next concept, cash flow analysis. Cash flow analysis tracks the actual inflow and outflow of cash and cash equivalents during a specific period, typically shown in cash flow statement. So where in fund flow analysis we track the sources and uses of funds. Here in cash flow analysis, we track the actual inflow and outflow of cash during a specific period. Now we are going to see the key focus. Liquidity. How well a company generates cash to pay its debt obligations and fund operation. So the main focus of the cash flow analysis is how well the company generates cash to pay its debt obligations and fund operations. That means the company should be ready to repay all its current liabilities and liabilities. So how the company can generate the cash, that will be analyzed in this cash flow analysis. Components. So as per Accounting Standard 3, IAS 7, operating activities, investing activities and financial activities are monitored. So operating activities is the core business cash flows. Investing activities, cash used in or generated from investments. Financing activities, that is cash related to debt, equity and dividends. These are the components of cash flow analysis. Here we can see the examples of cash inflows. So how the cash inflow into the business? By making the cash sales, loan proceeds, sale of investments. So these are current, that is it's a short term. So whenever we make a cash sales, we will get the cash. When we go for a short term loans, we can avail the loans from the banks or from creditors, like sale of investments. Cash outflow. What is meant by cash outflow? Payment to suppliers. So the amount which we got through inflow will be utilized for, we have to make the payment to the suppliers. We have to pay the salaries and wages. We will purchase some assets for the business and we will make the repayment of loans. So these are the cash outflows. So the main purpose of the cash flow analysis is to assert the short-term viability and liquidity of the company. So whereas in fund flow analysis, it is long-term financial strategy, assessing the long-term financial strategy and investment decision. But here it is to assess the short-term viability and liquidity position of the company. Now, the key difference of fund flow and cash flow analysis. So, on the basis of focus, under fund flow analysis, working capital changes is the main focus. On the aspect of cash flow analysis, it is the actual cash movement is the focus. Time frame. So, time frame for fund flow analysis usually a year. For cash flow analysis can be monthly, quarterly or yearly. Next is basis of accounting. So, Fund flow analysis is on the basis of accrual basis, here on the cash basis. Use long-term planning is the main use for the management. So by the cash flow analysis, short-term liquidity analysis will be analyzed. So statement prepared. So the statement prepared for fund flow analysis is fund flow statement, and for cash flow analysis is cash flow statement. The utility is to measure financial strategy for fund flow analysis, and for cash flow analysis it is measures liquidity and cash health. This is a short introduction about cash flow and fund flow analysis. Thank you so much for the patience listening.